All right, in this video, we will finish chapter 10, talking about the natural resources and intangible assets accounting. Okay, natural resources. Well, conceptually, they are different, but the accounting for natural resources are very similar to the accounting for tangible assets, such as PP&E. The difference, major difference is the terminology. For tangible assets like equipment, we depreciate. But for natural resources, we say it depletes or depletion. Okay, that is one thing. And another thing is, as we depreciate PP&E, we sort of lose our value, right? So depreciation is an expense. But for natural resources, you can use some different approach. That is, as your mine, for example, natural resources, mine depletes, what happens? You are a mining company, you extracted ores. That's what depletion means, right? As a result of depletion, you have ores to sell, right? So as a result of depletion, instead of expanding it, you are having an increase in inventory, the ores ready to be sold, right? So again, in tangible assets case or PP&E cases, we've debited depreciation expense and credited accumulated depreciation. But in natural resources cases, we debit inventory and credit accumulated depletion. Okay, enough of talking. Let's have a look at the example, BE 10.11. Franco Mining purchased for $7 million a mine, which is estimated to have 35 million tons of ore and no service value. In the first year, 5 million tons of ore are extracted. A, prepare the journal entry to record the depletion for the first year. B, show how the mine is reported on the balance sheet at the end of the first year. Okay. The given data is the mine is valued at 7 million. With an expectation to extract how many tons? 35 million tons, right? This gives us an estimation of $0.20 per ton, right? 20 cents you deplete the mine when you extract 1 ton. Does that make sense? Again, this is an application of units of activity method, yes. And then A, in the first year, you extracted how many tons? Then, in dollar terms, how much is the 5 million tons of ore? It is $1 million value of ores. Then you can say that you can debit inventory 1 million and accumulated depletion. 1 million and 1 million, right? Again, as you extract the ore, by that amount, you lose the value of your mine. But it's not entirely expense, as we did here, accumulate depreciation and here depreciation expense and here accumulate depreciation. No, in natural resources case, as you deplete, you have more and more inventory ores that are ready to be sold, which is literally inventory. So that's the difference. Okay, B, partial balance sheet. What do you have? Mine. Again, using the historical cost principle approach. You say that it has value of $7 million. But at the end of the first year, you've depleted how much? 1 million. Therefore, your mine value after net is $6 million. All right, that's about it for natural resources. And then the last topic left undiscussed in the asset part is intangible assets. Right. Then what do we have as intangible assets? We can think about items such as patent, copyrights, trademark, trade names, franchise, or license, goodwill.
Thanks.
Right? Okay, they have value because they are legally protected, right? Again, pharmaceutical companies, they are spending a lot of money for their R&D so that they can develop a medicine of which value is protected by the law, patent law, right? As a result, we need to reduce the value, right? If the legal protection expires in certain years, then we should, during that year period of years, we should reduce the value of these intangible assets, like depreciation. But we don't call it as depreciation. When it comes to intangible assets, we call them amortization. Oh my, I didn't share the screen. Oh my. All right. We call them amortization. Okay, based on the legal protection, some amortizes, some does not amortize. Okay, and one critical issue we should be careful here is R&D is not part of intangible assets. The US accounting standards state that you should expense the R&D rather than capitalizing it, the R&D, as intangible assets. Okay? Because R&D, the result of R&D is so uncertain, right? Pharmaceutical companies, the IT companies, they can spend a lot of money, but in the end, for nothing, right? You can fail, right? Not all of R&Ds turn out to be valuable, right? Sometimes you are not much successful as expected. Because of this high level of uncertainty, the US accounting standards state that you should not capitalize R&D as intangible assets. You should expense them as soon as they incur. Okay. Let's have a look at an example to further understand the accounting treatment of them. Gill Company, organized in 2020, has the following transactions related to intangible assets. January 2nd, April 1st, July 1st, September 1st, purchased patent, which has 7 years of life. Goodwill, by the way, goodwill, we didn't discuss it. Goodwill is the valuation difference. Usually on M&A. What are M&A? What are M&As? They are mergers and acquisition, meaning companies can sometimes buy others, right? Merger and acquisition. What are one of the famous M&A cases to you? Have you heard about Whole Food, right? Have you heard about Amazon, right? You know them. And you usually can order deliveries for Whole Food using Amazon's website, right? App. Meaning Whole Food is a subsidiary owned by Amazon. But believe me, like 5 years ago, Whole Food was an independent company. But Amazon purchased the Whole Food. Okay. Okay, let's think about the deal. You want to buy a company, all right? Then how much should you say about the purchasing price? Let's think ourselves as Whole Food. We believe that our value, the Whole Foods value, is $1 billion. $1 billion. And then Amazon says that, I want to buy you at $900 million. Would you sell it? No. When you believe that you are valuing $1 billion, you will sell it at not at a lower price. You will sell it at a price that is higher than $1 billion, such as $1.3 billion, right? Then, when the deal is completed, Amazon will value based on the acquisition cost, right? Principle. And in Amazon's book, you will record the Whole Food as $1.3 billion. When Amazon's the Whole Foods book value is $1 billion, right? Then how can we explain the difference, the discrepancy between 1.3 and 1? The difference between these two is explained by creating an account called goodwill, which is $0.3 billion. Okay. That said, let's have a look at the journal entries. goodwill purchased has indefinite life, 10 years of franchise, meaning you should amortize the franchise over the 10 years, expiration date, 10 years later. R&D, $185,000. Prepare necessary entries to record these intangibles. All costs incurred were for cash, make the adjusting entries as of December 31st, recording any necessary amortization. Okay, so first, let's prepare entries at the acquisition dates. Purchased patent. Again, intangible assets, so should be debited. Cash, $595. And then April 1st, goodwill, cash, $360. July 1st, franchise, $480, cash, $480. And then 9/1st, what do you have? R&D, but don't be confused. R&D should be, yes, expensed. So it should be R&D expense. How much? 185. 185. Cool. Out of them, we can see that it is clarified that we should amortize patent and franchise, right? At the end of the year, December 31st, we should amortize patent and franchise. How much? Out of 595K, how many days, how many years have been passed between January 2nd and December 31st? 1 year, right? And it is protected for 7 years. So you should amortize 1/7. How much is it? 555 divided by 7 is 85K. For franchise, it is 480, which is protected for 10 years. But note that the date is in the middle of the year, July 1st. Between July 1st and December 31st, only it is half a year. So 48 divided by 2, 24K. So the sum of the 85 and 24, which is 109, is the amount that you need to amortize over the years. Okay. All right. Yay, congratulations. That's the end of chapter 10. All right.